A warm welcome to all of us to our advanced financial reporting lecture series. Today, I want to focus on question practice. Of course, I'll be using some examples. We cannot come from, a hard place. We must begin with some basic examples just to encourage our students to appreciate what is at stake. Right. So I'm going to go straight into this question, and this question is a basic example on impairment loss. Now, a little bit of background: impairment loss arises when the recoverable amount of an asset is lower than what we call the carrying amount. I read the question, and I like starting with the requirements. So if you allow me, just go to the requirement. The requirement says, what should be the value of the trading platform in the statement of financial position, and what, if anything, is the impairment loss? So we've got the following information. A company that extracts natural gas and oil has a drilling platform in the Caspian Sea. It is required by legislation of the country concerned to remove and dismantle the platform at the end of its useful life. Accordingly, the company has included an amount in its accounts for removal and dismantling costs, and is depreciating this amount of the platform's expected life. The company is carrying out an exercise to establish whether there has been an impairment on the platform. So we'll run through these numbers, and of course, it says its carrying amount in the statement of financial position is 3 million. So you get your carrying amount. You have got the company has received an offer 2.8 for the platform from another company. This is going to take the place of fair value, less cost to sell. The present value of the estimated cash flows from the platform continued use is 3.3. That is your value in use. Now there's a note down there which says the carrying amount in the statement of financial position for the provision for dismantling and removal is currently standing at 0.6. So will this 0.6 affect your fair value less cost, or indeed your value in use? I say it should affect your value in use, because remember, the reason why we're going to incur this cost is because of the usage of the facilities. So let me just run you through. I'm using Excel as my board. I thought I saw some of these amounts, you see, and I'm going to ask that you take some bit of time to write as well. So what I saw on the carrying amount was the 3 million, and then what I saw on the, just bear with me here, I'll have to do some bit of alignment. What I saw on the, excuse me, there's also value in use. There's what we call fair value less cost. Okay, is students understanding these things. So our carrying amount is 3. Then the offer, that is fair value, is 2.8. And then we have got 3.3 minus 0.6. That is our value in use. So allow me to write that 0.6. Well, I need my points now, otherwise I'll be in trouble very soon. Okay, great. I think that's how it looks there. Okay, so that's what we have. Why do we have a negative there? I was supposed to say 3.3 minus 0.6. Great. So it's 2.7. Okay, now, great. So the next step, without wasting too much time, because this was not going to be a very difficult one in your exams. It's just a snapshot of what's supposed to be examined. I'm going to go for, what did I say here? It was 2.8. I'm going to have to just juxtaposition that one. All right, 2.8, and I think you can see that this is a close call, because the carrying amount, the recoverable amount, all right, of the asset is the higher of the two. Recoverable amount is the higher of the two last figures, which in this case will be a 2.8. So what you're going to do, again, this is throwing me into the dilemma of I'm not going to waste too much time on this. So that is our figure there. So that now we can safely conclude that the impairment loss will be equal to the carrying amount, which is higher than the recoverable amount of 2.8. I hope you can see that. Again, my maths record is failing me, so I'm going to right. So it's 0.2 dollars, which is $200,000. So that's your impairment loss on this basic question. Now we need to know that impairment loss will result in the following double entry. We debit the profit or loss. The students are taking notes, please. And then you credit what we call the asset account with this figure. So if there was a previous revaluation, we should have debited any revaluation surplus. So please let us remember that. Thank you very much for listening to that one. I'm going to just briefly format this this Excel sheet a little bit, because I know I'm going to get into trouble again with the other works. So if I say that, all right, at least I think I'm a bit safe now in terms of accounting. Let's go to question 2, please. I'm going to have to read the question for you. We have got what we call a cash generating unit, and I sent you some of these things, but let us look at that question. We go down there. What does the question 2, yes, question 2, I hope I've not skipped anything, this question. Yeah, so there we go. Question 2 is written assignment 1 there. Shiplake is preparing his financial statements for the year ended 31st March 20x2. Shiplake has undertaken an impairment review which has identified an issue with one of the earth moving assets. The question, of course, I almost forgot, is explain the effect of the above information on Shiplake's financial statements, if we're going to have any effect, that is. I read again. Shiplake is preparing his financial statements. The year ended is 31st March X2. Shiplake has undertaken an impairment review which has identified an issue with an item of earth moving plant which is hired out to companies on short-term contracts. The plant's carrying amount is $400,000. The estimated selling price of the plant is only $250,000, with associated selling expenses of $5,000. So we are dealing with $245,000 as fair value less costs. A recent review of his carrying value, is that carrying value? A recent review of his value use, rather, based on forecast future cash flows, was estimated at $500,000. Now I want you to notice that $500,000 is bigger than the carrying amount of $400,000. Since this review was undertaken, there has been a dramatic increase in interest rates that has rather significantly increased the cost of capital used by Shiplake to discount the future cash flows of the plant. All right. So, what, if any, will be the impairment of this particular question? I'd like just to answer this one quickly from here. There will be no impairment for the simple reason that the recoverable amount, which is 500, is greater than the carrying value. And I wanted to say also that there will be no evaluation gain, right? So please, that is what we see now. How about we can make a point there, say, because of dramatic increase in interest rates, it would be important to check this number here, because if we were to apply the current interest rates to that number, then we might find that it's dropping below 400. So please, there must be more investigations on that. All right, I'm still moving on. I'm now on the cash generating unit, and I have sent you some of these links in terms of the document. Of course, you have to make reference. I'm demonstrating now how to go about some of these questions, and of course, I had to take some bit of time to read through this work. Now, I want you to read this question. Of course, very soon we're going to look at something else. It says, discuss, this is now the next question, discuss with suitable computations showing the allocation of any impairment losses, the accounting treatment of the impairment test. So we are now dealing, ladies and gentlemen, with a cash generating unit. Now, from your studies, of course, you remember that a cash generating unit is the smallest group of assets that is capable of generating independent cash flows. And in this case, we have also what we call corporate assets, shared assets. As you can see in the headings here, we have got Division A, Division B, Head Office, which is a shared resource, and of course, unallocated goodwill. Can I read? All right. The Sachet group, I'm starting from the top there, is made up of 2 cash generating units as a result of a combination of various past 100% acquisition, plus a head office, which was not allocated to any cash generating unit because it supports both divisions. Due to falling sales as a result of an economic crisis, an impairment test was conducted at the year end. The consolidated statement of financial position showed the following assets. Okay, so we have got these assets. At your own time, of course, you can read through the recoverable amounts, rather, at the year end were as follows. Division A stands at 1,000, Division B stands at 720. Group as a whole has been reduced to the value of 18.5, including head office, property, plant and equipment at fair value less cost of disposal of 85 million. The recoverable amounts of the 2 divisions were based on value in use. Fair value less cost of disposal of any individual item was substantially below this. No impairment losses had previously been necessary. It's your turn now, Mr. Accountant, to look through this particular question. Try to see if you can run through this question. All right, so we're going to start allocating impairment, and I wanted to start that we have to allocate impairment initially to the individual divisions, and then we shall go on to allocating impairment to the entire group. So you will have to write what I'm doing here, and I hope that everything is okay out there. Let us write something. So we have got Division A, and then we have got Division B. Okay, Division B. All right, I'm getting back around. You see, typing skills are not easy to build on, but I think I'm getting back around. Now, the CV, you can make reference to your document of Division A stands at 1020. That is according to the table here. All right, you can see that figure here. Okay, you can see that figure as well there. All right, so the CV of Division A is 1020, while that of Division B is 720, 760 rather. All right, so this other side we have got the total. Okay, I will be, you know, making adjustments time to time to my, you know, work presentation so that nobody is left behind. All right, so now what's the recoverable amount? Excuse me, for these two divisions. So we've got 1,000 for division A, and then okay, I think for the sake of, you know, clarity, I'm going to have to do away with these zeros. You know, they're making my work a little bit untidy. And then for the other division, I can see a 720 there. This is the recoverable amount. Please, where am I getting these figures? You need to check with me. I am getting these figures from here, so you can see those figures. But if you're making reference, I think that should not be a difficult thing to appreciate. Okay, so what I'm going to do now is that I'm going to find the impairment losses on these divisions so that you can see where I am going. Okay, so those are the, you know, losses that we have for the two divisions, and of course the total is 60. Okay, great. Now, how do we allocate the above impairment losses? So remember, in your basic studies you have got the rule: impairment must be allocated in the following manner. So you first of all allocate the impairment loss to goodwill. That is goodwill in this case for the divisions, and then you shall allocate impairment loss to any damaged assets, and then the rest of the assets in the, you know, CGU. Okay, so we're going to begin from division A, of course. When I look at division A, all right, so division A, again, maybe I can take a bit of time to get this over and done with. All right. Okay, so there we go. What am I doing here? I need to end very soon, you know. But let's do some bit of work here. When you look at your table again, you will observe that, of course, for division A, we have got impairment loss of about 20. So the entire 20 will go to goodwill. Can you see this goodwill? All right. So it will be contained within the goodwill amount. So let's take it there. So I'll say goodwill. I write that one. Write that one. Yes. Goodwill. So the entire 20 goes to goodwill. Okay. Then if there's any other loss to be allocated, you go to other assets. But I don't think that we have got anything more to do on A. But let's look at B. Under B, the total loss, when you look at my workings here, was about 40, but we have got goodwill only, which is 30, so 30 allocated to goodwill. But the 40 has not been exhausted, so what we do, we take the 10 to other assets. I hope that you can see that. There's nothing on the other side. All right, so great. So I hope you can still see that in this case, my impairment loss that I calculated on top there still intact. And I now go to test 2. Okay, I'm now going to go to the entire group. So what is the CV of the CGU? CV of CGU, we are told, and you have to pay attention, the new value, if I may say that. Okay, I'm going to run with the new values. We've got a 1000 for division A, we've got a 720 for division B, Then we have got some other figures that have been given to us. If I may go there, I'm just going to make reference to that. There is a 10. Can you see that? There's a 10 for goodwill and there's a 110 for head office. So we're going to get those amounts and push them here, 10 for goodwill and 110 for head office, and then find the new figure. Okay, these are millions of dollars, of course. I'm going to just write something like that. Okay, there. So what do we have again? 1000 plus 720 plus 10 plus 110. I've got that figure. Now what is the recoverable amount of the entire group? It's given the amount in the question. Please count check with me. Maybe I can go there so that I can just show you where I'm getting this figure. You can see this 1825, so you will have to put it where it belongs, 1825. Okay, so let's find the difference between the two amounts, that minus this. Hope you can see we've got a 15 here. So how do we allocate this 15? Allocation, I think we need to discuss that again. Excuse me. So goodwill, that is corporate goodwill. I think that we're standing at if you look at our question, corporate goodwill is standing at about 10 there. So I'm going to allocate that loss to the corporate goodwill and then the rest to other assets, and of course we're going to do justice to that. Okay, so you're saying goodwill gets 10, then other assets. How do I write other assets? What do you have? You've got a 5, so that you can complete the number there. Okay, great. So essentially what we're going to do now is we're going to draft up a revised table and work backwards. So please just follow through, and of course you can always ask questions when you are through with this discussion. Questions are almost welcome at every rate. So we have got division A. I hope you can write that one as well. Division B. Yes, we've got HQ. What else do you have? You've got the issue. If I look at my table again, you have got unallocated goodwill. Yes, unallocated unallocated goodwill. We can just take our time to write something there. What else do you have? You have got total there, so I'm going just to deal with it's not going to look good, so let me just write something like that. Okay, so millions of dollars again, and I'm just going to try to do this for us. Please write this table as well. You need to write the table. Okay, great. So that's what we have there, and let us try to do some bit of work in terms of allocation. So you've got the entries there, the elements of the CGU. We've got PPE. I've got the goodwill itself. What else do you have? You've got the net assets. Yes. What else do we have? Okay. Maybe for the sake of clarity, let me just create some spaces here so that you can see clearly what is going on, so that you don't say I am behind. Okay, so we begin, and please remember, in your impairment table, you want to start with the totals, so that nothing goes wrong there. Totals, we work backwards, so to speak. So what is the recoverable amount of the first division? I think you can see there we have got 1000. The second division we have got 720. These are the recoverable amounts. Let me just do this so that I can make life a little bit easy. I don't want those other zeros to be showing. Okay, what else do you have? You have got the other amounts, but please take note that the new total for the CGU is now standing at 1825. Yeah, so 1825. I think we can make do with that. All right, so let us try to see if we can make sense out of this one. Okay, great. Let me just create some space here. Oh no, it'll be too much. Let's get back. Get back, yes. Great. There you go. I hope that you can see what I've done here. Should I reduce this further so that you can have a clear picture of what is going on here? Okay, let's try to, yeah, there we go. There we go. All right, so let's begin now to rewrite our numbers, and I'm explaining. Please make reference to your table. And the division A, property, plant and equipment, remains unaffected because our goodwill figure was less than the goodwill that was here. The goodwill that was here was 60, but now we are removing a 20. Remember, in division A we had the loss of a 20. So I'm writing this to show you what is happening. 60 minus 20 gives you about a 40. The net assets, for the net assets there was no effect. All right, there was no effect. So you want to check yourself if you are balancing in terms of, if you were to sum up all these amounts. I think you are. You can see the 1000 there, the 1000 there. Okay, let me just highlight that. All right, let's progress. Okay, under division B, what is happening? Remember, in our previous working, we had a total impairment initially of 40. This 40 is allocated to goodwill. 30 goes, goodwill goes completely out, and the 10 goes to other assets. In this case, we'll be dealing with the non-current assets. Remember, the other ones are supposed to be net current assets, and net current assets are not supposed to be impaired for your own information. So I am writing now. We had 620 where in the space where I'm typing, but since 10 was allocated to other assets, 10 impairment loss was allocated, we are going to drop down to 610, and then there will be no goodwill. Why? Because it has been taken out in full. And then net current assets remain unimpaired. These will be recovered within a year. So let's remember that. Let me just try to sum up so that we can check whether we are balancing. Yes, we are. Please take note of the comparatives there. Okay, great. What else do you have? Let us deal with HQ. So for HQ, remember when we did the second impairment test on the entire group, we had an extra goodwill loss of about 5 and 10 went to goodwill. So let me just show you. This is what I'm talking about. We had 15 total goodwill, 10 goes to goodwill, and 5 goes to the rest of the assets. So let's deal with that. So 90 minus 5, I now type here for your reference. We have got about 85, and then we have goodwill being taken out in full because that 10 must go out in full. Can I write that one for you so that you can see what I'm talking about? 10 minus 10. Yeah, I'm sure it's the same. And then what else do you have? You have got net current assets of about 20. So that one we can always do some bit of summation here so that we can see what is going on. Okay, so 105, there we go. Okay, next, what else do you have? The issue, I'm going to write this 105 here because there's nothing much here. Unallocated goodwill, yeah. So unallocated goodwill, let me just check here. I want to check in my, yes. So unallocated goodwill was the one that was going out, huh? All right, so there was no the 10 that I was referring to here. Let me just make a bit of some. The 10 that I was referring to there is supposed to be coming here. So 10 minus 10 goes out. Here there was no, the good was not strategically located there. It was located here. So I'm going to say in this case, under unallocated goodwill we have got 0, and also here we have got 0. Okay, so now you can sum up on the other side. Try to check if your rows are okay. So there we go. I drag everything down there. Hope that you can see what I'm doing. Yes. So everything is okay. We have done our work. That is how you deal with what we call CGU. Yeah. Goodwill impairment must be prioritized. Of course, you saw what I did. So the rules have been given there. Thank you very much for listening in, and I want to progress. If I can, we have any other question that we can look at? I think for now, this is what I have, because the videos need not to be very lengthy. I'll end here, and I want to ask for some questions from you. Next time when I come through, I'll deal with more, workings.